current capital rules as well capitalized.
All right, thank you very much.
Thanks, Senator Crepos. Senator Cortez Masto from Nevada is recognized.
Thank you, Mr. Chair. Thank you, all three of you, for being here. Vice Chairman Barr, let me start with you. You've talked about how the Federal Reserve is undergoing an investigation to determine whether the Federal Reserve actually failed in this instance. Is the Federal Reserve the appropriate body to conduct this investigation, or should we have an independent investigation?
Thank you, Senator. It's a terrific question. We describe what we're doing as a review. We're reviewing our own practices. I think it's an important part of risk management to do self-assessment. I think it would be irresponsible and imprudent of us not to do self-assessment. We're going to take that very seriously. We're going to be thorough. We're going to be transparent, and we're going to be far-reaching in that self-assessment. I also think it's appropriate for outsiders to have independent reviews, and we expect and welcome independent reviews of our actions.
And if you uncover in your investigation that the Federal Reserve failed here in some of its supervisory roles, will you make that public?
Yes, we intend to make our report fully public on May 1st, and that report will include, normally it's not our practice to include, but that report will include confidential supervisory information such as the exam reports.
And in the scope of your review, you identify the scope of that review in your written testimony. Is there anything in addition that's not in your written testimony that you will be reviewing here in that scope?
Thank you, Senator. I've asked the staff to be far-reaching. So if they determine that an issue should be in scope, they have full discretion to put that issue in scope and to address it in the review. So there are no limitations on their ability to review how the Federal Reserve conducted its supervision and the regulatory oversight of the firm.
Thank you. And then one final thing, because there's been a lot of discussion about the previous rollback of some of the regulation in votes in this body just recently. If you find that that change in the law impacted the Federal Reserve's ability to conduct the appropriate tests based on the tiering of the bank's assets, would you be forthcoming with that and say so?
Yes, we intend to describe where we think supervisory and regulatory failings occurred. If changing those to make them what we think is the right standard would require an act of Congress, we will say so in that review.
And then Chairman Gruenberg, same to you. You're conducting a scope of the FDIC. Are you comfortable that you can conduct that and be transparent and accountable, or should there be an independent body looking at this?
I think there's room for both. As Michael indicated, I think it's important for each of our agencies to look internally at our supervision of these institutions and draw lessons from it. In our case, we've asked our Chief Risk Officer, who's not directly involved in the supervision process and whose role is to evaluate risk at the FDIC, to undertake this internal review of our supervision of Signature Bank.
Thank you. And then there's been a lot of talk in the media about the executive salaries, about the executive bonuses, about the sale of stock. Let me ask the three of you. My first question is, what authority do you have to claw back any of those bonuses or the executive pay, or even deal with the sale of the stock? And maybe, Mr. Gruenberg, let's start with you and then go down.
Thank you, Senator. You know, as I indicated in my opening statement, the FDIC, for every failed institution, is required to undertake an investigation of the conduct of the members of the board, the management of the institution, as well as professional service providers and other institution-affiliated parties. We've already begun that investigation, and we have significant authority under the law, depending on the findings of the investigation, to impose civil money penalties, restitution, and as well bar individuals from the business of banking. So the authorities are substantial, and we're going to pursue this as expeditiously as we can. I know there's interest. We do not have, under the Federal Deposit Insurance Act, explicit authority for clawback of compensation. We can get to some of that with our other authorities. We have that specific authority under Title II of the Dodd-Frank Act. If you are looking for an additional authority, specific authority under the FDI Act for clawbacks, probably would have some value here.
Thank you. Mr. Barr?
Thank you. The board does have authority to pursue actions against individuals who engage in violations of the law, who engage in unsafe or unsound practices, who have engaged in breaches of fiduciary duty. We retain this authority even after a bank fails. And we stand ready to use this authority to the fullest extent based on the facts and circumstances. And as with Chair Gruenberg, potential consequences include a prohibition from banking, civil money penalties, or the payment of restitution. We intend to use these authorities to the fullest extent we are able.
Thank you. Ms. Lang, and I know, with the chairman's indulgence.
Yeah, briefly, Ms. Langston.
Yes, I defer to the FDIC and Federal Reserve on this.
Thank you. Thank you, Mr. Chairman.
That was brief. Thank you, Madam Undersecretary. Senator Rounds of South